I want to introduce everybody to moving averages. So moving averages are great tools for pattern traders. One of the most popular tools in trading is moving averages. What they do is they smooth out the data, makes it a lot easier to spot a trend. Also helps by filtering out the noise of very volatile markets, which obviously we're in. Calculated by using the closing price. So your moving averages, you can, in your settings in Coinigy, you set the length of the moving average. So basically you go here, indicators, and moving averages are found here. This is a simple moving average. We'll talk about the difference in a second. Simple moving average. And then you add it, it'll come up here, you go to your little cog, and then you pick your color. I want to encourage everybody to please use the same colors that I use, because it's going to make it a lot easier for everybody else to read your charts, because when you post these charts, the colors don't post on when you post a link. Essentially, you're going to change your color right here. Go down and you basically select your color. Then you go to your inputs, and this is the length of your moving average. So this will be, let's say this is a daily chart that we're looking at for ADA. So each one of these candles, these red and green bars, each one stands for 1 day because it's a daily chart. If it was a 5-minute chart, each one of these candles would be for a 5-minute time frame. So now this length will be, a moving average is the average closing price of a certain number of candles. So in this situation, it's set at 9. So this moving average would be the average of the last 9 daily, because this is a daily chart, candles. Okay, and so it'll give you a line that represents that data. I recommend everybody uses a 50. So here you go to 50. Okay, so you'll see I already have a 50 up here. The color that I want you to use for 50 is red. I've also been using, the most popular I'd say are 50, 100, and 200. Then I've added a 21 and an 80. So you'll go in, and again, you'll add 5 moving averages. So you'll go here and you'll type in moving average, and you'll click this 5 times, and it's going to add all these over here. Okay. Then you basically go in, obviously you won't have this many, but you go in and then you go to settings for each one. You change your input. You want a 21 day. I make the 21 day white gray color. Okay. Then go to style. Basically, I choose like this grayish color. We've got our 50, and the 50 needs to be red, and the 100 needs to be blue. These are simple moving averages again, and and we'll talk about. Everyone's gonna have their personal opinions as far as what moving averages to use. But if we maintain this, at least in the beginning, I can look at your charts real easy and point out a lot of things that are important. The 80 is a pinkish purple color, and then so you'll have 5 SMAs. It's called moving averages, but they're simple moving averages. And so here's basically your moving averages. So we're going to talk more about these moving averages for a minute, and then we'll jump right into the market. Today in crypto, we use the 21 period, the 80 period, the 100 period, the the 50, the 200 period, because you could use them on an hourly chart or a 4-hour chart. You're only using the 200 daily moving average if you're on the daily chart. So they're referred to as periods, a period of time. Let's learn to understand how and when to use moving averages. So they work as dynamic support and resistance. Traders often keep an eye on these moving averages, which partly results in a self-fulfilling prophecy. If everybody uses TA, that's really one of the main reasons why it works so well, because everybody else is looking at the same exact indicators and charts and patterns and setups and moving averages and MACD. So that's why they work so well, because everybody else respects them. And then the bots are programmed to use the exact same indicators. The simple moving average and the exponential moving average is the most common. So I'll explain that real quick. So the exponential moving average is a little bit different. They're weighted as far as the most recent data, as far as price history goes. So if you're taking the 200 daily moving averages here, this price action right here, this data would be weighted when they calculate this average. So what happens, the EMAs, and I'm about to start trying and using the EMAs, back testing them and whatnot. So if you're using EMAs already, and you like it, you definitely keep, if you have a strategy with moving averages, definitely keep that in place. So these EMAs adapt faster to the current rally or drop, giving a trader a heads up. Which one is the best to use and which length? So SMA, simple moving average, or MAs, are for analysis, and then EMAs are for entry signals. Okay, so when you get these crossovers, they're going to give you buy and sell signals, and EMAs are technically better to use for that. So length is something a trader needs to test to see which length gives the best results in the case of the trend, as far as determining the entry signals. Your whole style, you're going to develop an entire style that you see that works for you, and you're going to believe in it because you created it. And so over time, it'll take some time for this to develop, but you're going to come up with that. It's basically like the evolution of your trading strategy. Moving average indicators can be used for 4 things: trend, value, entry, and stop loss. So the trend, moving averages are a great tool for helping you determine the trend. The slope of the moving average determines the trend. So if you look down here at the chart, the slope here is sideways, which indicates no trend. So this moving average is moving sideways. There's not really a trend. Here you see the slope is up, so that you got your moving average moving higher, and this indicates the trend is up. So a lot of people will even start to look at this. If you look at this pinkish moving average down here and see how it starts to curl higher, as soon as they start to curl higher, people get excited about that because it shows potentially the trend is changing. And this works with a lot of indicators as well, MACD, stochastic RSI, and such. So that's important, just to notice the curling of the moving averages going forward. It's also important where the price action is compared to the moving average. Is it above or below? So right here you can see that the price action, and this person uses a bar chart, which is different than candles, but same difference. So the price action is above this moving average. So this again shows it's an uptrend. So if the price action is below the moving average, most times it's a downtrend. When using multiple moving averages, you can determine the trend by having a short moving average. Let's say some people use a 9 or a 7. I use a 21 because I don't normally day trade like that. But I'm definitely open to trying out shorter time frames. You just have to find out what works for you. Like, I was a real simple trader. I trade on patterns and volume and support and resistance, and I was doing very well. But then now I've really kind of opened my eyes. Like, let me just expand a little bit. I've got a really good handle. I became successful trading this way, and now I want to expand. It's whenever the short moving average is under the longer term moving average, the trend is down, and vice versa. So what they're saying is you've got this pinkish is the 20 moving average. This bluish is, you can see up here, is a 50 moving average. The short-term moving average is above the long-term moving average, and that shows it's an uptrend. Value, whenever the price is near the moving average, it will have a fair value, and it could be a place to initiate a position. So remember, these are averages of the average price. So if there's a huge run up, when the price comes down close to the moving average, it's going to be considered more of a fair value. So a lot of times you'll put your buys in place at those points. So here, looking at this bluish moving average, you'll see the price action is quite a bit above it, and then it comes down and gets real close to it, and they're basically stating this could be a buy signal, as far as, or you put a limit order at the moving average. And again, here and here, at your closest point to the average price over a given time period, is going to be your best bargain. Many traders use moving averages for entry. This can be done in several ways. So you might get a crossover of 2 moving averages. If you have a short term and an intermediate, such as the 9 and the 20 they're using. This is a bullish buy signal. So when you see a shorter time frame cross a longer time frame to the upside, so your shorter time frame crosses up, and the price action, you'll notice the price action moves higher. This shorter time frame crosses down, downtrend, sell signal. Okay. Also, it's a bullish sign if the price closes back above a moving average. So here it closed above, would be bullish as far as closing above the intermediate moving average, and basically this trend continues higher. Here it closes above the intermediate moving average and then continues higher. Also, like we talked about, you may want to put your limit orders down here. When it touches it, you could put your limit orders, and then the great part about this is you can put your stop losses beneath all these, and this will help you where to put your stop losses at. When a moving average, it acts as support and resistance. It's dynamic because it's changing constantly with the trend. Greenish moving average right here. So you see how it closes below that? So you basically, if your stop loss was here, you would avoid all this downtrend. Moving averages are a great tool when combining with other indicators. An idea would be to use moving averages to determine the trend, and then an oscillator to pinpoint entries on pullback. So divergences are good for that as well. MACD, which I'm going to make a video on real soon, is also good with that. Moving averages are also excellent add-ons to chart pattern traders. Moving averages are going to help everybody a lot, and I'm excited for everybody to try this. All right, now as far as back testing goes, and here's what I encourage you to do. After you get some moving averages set up, I want you to watch how the price action relates to these moving averages. So this is a daily chart, and you'll go through and just kind of understand. If you look right here, this is the 21, and so 21's new to me. I started using it, and I really like it because it has a lot of validity. So you can see right here, all these wicks keep finding support on the 21. So to me, this shows validity of the moving average. Same thing right here. You see how it bounced off the 21? Right here, bounced off the 21. Right here, bounced off the 21. Here too. But you're also going to use these for crossovers on different time frames. Let's look at death cross, because you guys have probably heard about this on YouTube. Everybody's like, the death cross is coming. Here it is. So what is the death cross? Death cross is when the 50-day moving average crosses lower than the 200 moving average daily. Your 50 crossed down, and then the price broke lower. Versus the golden cross. So you've got your 50 daily moving average crossing higher than your 200 daily moving average. So take a look at an example where this works. So you got your golden cross right here. So you got your 50, remember 50 is red, crosses to the upside of the 200. Yellow's the 200, crosses over, and then look at the price action from here on out. Okay, moonshot. Everything we use is going to play into a bigger picture, so it's really important to kind of learn bits and pieces of everything, and we'll solidify everything as time goes on. I'm going to make more videos on this, but I really just wanted to introduce you to these moving averages. You can imagine here, so the reason why, I want you to notice this. So you've got, ADA was added on 12/2/2017 to Binance. So here's your first, as far as the price action goes. So it took 200 days just to get you can't have a 200-day moving average if you don't have 200 days. So your 200 moving average just started here. But you could basically guess that this, where I drew it in, would be what the death cross would have looked like. So your death cross happened right here. Look at this trend. Look at this price action. A lot of times these patterns, everybody gets super excited when they're at their lows, where we're basically at across the board right now. A lot of these cryptos will break up to their 200 moving average and either get rejected or find support there after they break through. And that's really another good strategy to have as far as when to take profits, and maybe you've got second and third levels of where to take profits at, and your 200 daily moving average becomes one of those. So that's an important aspect to it as well. Definitely want to encourage everybody to start checking out these moving averages. When you're looking at where a crypto is headed, or is it going to move lower? If you're asking yourself this question, is this going to move lower? You want to be mindful of where the moving average is at. So if the moving averages are below the price action like they are right here, the possibility of finding support is a lot higher. So versus in a downtrend, when they start to move below all the moving averages, it gets kind of dicey. You could get a quick drop. Appreciate you guys watching. Thank you for your support. I'll talk to you guys soon.